I want to thank you all for coming. For those of you who don't already know it, you're going to discover that there is no law requiring anybody to pay income taxes or keep books and records for income tax purposes. And you'll also discover that there is no penalties or crimes involving income taxes. Despite this, as reported in the paper, because of IRS pressure, people have committed suicide. As a matter of fact, if you saw the Maury Povich show last year, well, husband committed suicide. People have had nervous breakdowns, forced into bankruptcy, and their businesses are literally destroyed, all because of IRS pressure. And all because they were pressured to pay a tax that no law requires anybody to pay. Here is the Internal Revenue Code, and I'm the nation's leading seller of Internal Revenue Code. I buy them 500 at a clip. We're going to get into this. And there is no law in here that requires anybody to keep books and records or to pay income taxes. Now, I just said a little while ago, because of IRS pressure. Now, the government, the federal government, has done a terrific public relations job. They've gotten everybody to hate the IRS and fear the IRS, while presumably still respecting and liking their government. It's amazing. On the Maury Povich show, for instance, and these other shows, they'll talk about IRS abusing their authority, the IRS doing this, the IRS doing that. Nobody ever bothers to mention it's the government that's doing it. It would be as if I were walking around a room punching people in the nose. And the people would say, oh, Schiff is a nice guy, but his fist, oh, his fist is terrible. As if I have no control over my fist. This is what the government has done. But the IRS does nothing that the courts and Congress doesn't let them get away with. The real culprits here are federal judges who have been putting people in jail, knowingly putting people in jail, for violating a law that nobody was required to obey. As a matter of fact, there's no law. As a matter of fact, the definition of a tax is a mandatory exaction for the support of government. Since there's nothing mandatory in here about paying an income tax, it shouldn't even be called an income tax. The government invites contributions. As a matter of fact, when I write certain articles or pleadings to the court, sometimes I take the word tax and I put quotes around it, because technically there is no such thing as an income tax. There is no such thing as a voluntary tax. Either you're required to pay it, in which case it's a law, and if you're not required to pay it, it shouldn't even be termed a tax. And you know, it's strange. The government reports from time to time when there's a tornado or the flood or a hurricane and people's houses are damaged and destroyed. The government immediately jumps in with low income loans, low interest rate loans, and we're going to help these people. At the same time, every day, hundreds of houses are being seized by the IRS or the government. Paychecks, bank accounts, where people lose their homes because they don't have their bank accounts. As a matter of fact, in the March 1997 issue of the Reader's Digest, there was an article, The IRS versus Us, meaning U.S. And in that article, they accurately reported that in 1996, the IRS seized 3 million paychecks. So here's the government seizes homes from some people in order to get money so these people can fix up their home. Now, the reason they do that is they get a lot of publicity when they fix up people's homes. It seems like we have a benevolent government. Meanwhile, the papers don't report the homes in the given community that the IRS seizes. So the whole thing is nonsense. So the newspapers don't report it. In a nutshell, the IRS, the income tax, represents the greatest program of organized extortion the world has ever seen. How is it possible, therefore, you might ask, how is the government able to hoodwink 100 million Americans into paying a tax that no law requires anybody to pay? Well, the government has a lot of help. It has a lot of help from the people, the tax preparers, who the public looks to for tax advice. Your accountants, your tax lawyers, your publishing companies who publish all kinds of books on, paying the income tax. They know it's voluntary. They know there is no statute requiring you to pay. But the real beneficiaries of the income tax are the American Bar Association. They make billions of dollars litigating a law that that doesn't even exist. Make billions of dollars. And I can't conceive of a tax lawyer not knowing what I'm going to tell you today. But before we get through, I can assure you that you will know more about income tax than 95% of the accountants and the lawyers who hold themselves off as being experts. Now, the fact of the matter is that you came down here today is really unnecessary. Everybody should have known all there is to know about the income tax if they just paid 50 cents and they bought the January 9th issue of the San Diego Union Tribune. And for 50 cents, you would have learned, here's a book I wrote, The Federal Mafia. It's $30. Nobody should have to pay $30 to buy this book because they would find out everything they needed from this little article in the San Diego Union Tribune. And what happened is that on January 8th, the former commissioner, Margaret Milner Richardson, resigned. She resigned the day before. And let me read the account that appeared in the San Diego Union Tribune. IRS Commissioner Margaret Milner Richardson warned yesterday that continued public bashing of her agency may someday undermine Americans' willingness to pay their taxes voluntarily. Ultimately, she said, I worry it may have some impact on our self-assessment system. Now, there's two things she said. The payment of income tax is voluntary, and she mentioned self-assessment. Now, how many people, when they read this, said, gee, she's the commissioner, she's saying it's voluntary, I won't volunteer anymore. No, you know what they would assume? They would assume she made a mistake. Now, most Americans are, when it comes to income taxes, they have the psychological ailment. It's called cognitive dissonance, which is a psychological ailment which says that if you have a deep-seated belief of something and somebody tells you something that's contrary to that deep-seated belief, you reject it. You don't even consider it. It's like throwing a ping pong ball against your head. So many Americans believe that they're required to pay income taxes that even when the commissioner says it's voluntary, it doesn't even penetrate. You're going to find out why it's voluntary in a minute. And what does self-assessment mean? Self-assessment means you assess yourself. And unless you assess yourself, you can't even owe the tax. Now, most people who pay property taxes know they get a property tax. They don't assess themselves. The city sends an assessor down, determines your tax, and sends you a bill. Well, you know, you're going to discover, that's what the law says. If you owe an income tax, the government's supposed to send you a bill. And until they do that, you don't owe the tax. But again, how come you don't know this? Because your accountant and lawyer doesn't even bother to tell you. I want to ask you a question. How many people here, be truthful, how many people here filed a tax return last year? Come on, how many people filed a tax return last year? No, you didn't. You filed a confession. Well, think about it. If you can return a library book, you can return a lawnmower to your neighbor, but when I say return, what do you return to the government? You don't return anything. The word return first appeared in the tax literature in the Tax Act of 1862. And a return was a document prepared by government tax collectors returning to the government the documents that they were given to collect the tax and the money. And a return was a document prepared by government tax collectors. That's the way the word return now makes some sense. What you filed is a confession. Well, think about it. Don't you confess to how much money you believe you earned, what your deductions are, and you sign that confession under penalty of perjury. But suppose the government said, hey, it's April 15th, time to get in your confessions. The American public, hey, wait a minute, I can't be required to confess. And when you go to your accountants and lawyers, do they say, now, you sure you want to confess? No. Now, did you know, how many people knew that all the information they put on their tax return could be used against them? Suppose your accountant said this to you when you filled out your tax return. Now, do you realize all this information the government can use against you? They can give it to foreign governments, they can give it to various government agencies, and they can use it against you. Is it okay with you if all this information is used against you? Is it okay with you? You would say no. Well, the government, we're going to get to that, the government tells you that right here in the 1040 booklet. They tell you, we may give the information to the Department of Justice and to other federal agencies provided by law, and we may give it to the cities, the states, the District of Columbia. But nobody reads this because it's buried in the Privacy Act. Nobody reads this because look what it says on top. Privacy Act and Paperwork Reduction Act notice. Everybody thinks when they see this, well, it has to do with saving government paperwork. And even if you read it, you wouldn't understand it anyway. But we're going to get to this. We're going to devote a segment. The point is, it's voluntary. And look, even when the government comes right out, I just showed you in the paper. Now here is another article. This article was in USA Today, March 6, 1997. Here's the article. And in this article, USA Today was interviewing Senator Bob Kerrey, Democrat of Nebraska, who was co-chairman of the commission to restructure the IRS. And one of the objectives of the commission, presumably, was to ensure that the IRS collected taxes in a fair and reasonable manner. So the reporter asked Kerry, why does being fair and reasonable matter? And here's his answer. Because it's a voluntary system. If people don't perceive it to be fair, people will not voluntarily comply. We are struggling to maintain ground on voluntary compliance. Now, the word voluntary compliance, you'll see over and over again in a number of articles issued by the IRS in taxes. And the minute the people see voluntary compliance, they don't understand. Voluntary compliance means compliance is voluntary. But the public doesn't believe it. Actually, voluntary compliance is the classic oxymoron. It's a contradiction of terms. If something is voluntary, you don't have to comply. If you have to comply, it's not voluntary. So even though the public is told that the income tax over and over again is based on voluntary compliance, they never say, well, I don't want to volunteer. Now, what happened here, right on page 13 of the Federal Mafia, I actually reproduced the mission statement, which was the mission statement of the government for the last 20 years of the IRS, which they just changed, incidentally, because we've been using this so effectively against them. They wanted to take out voluntary compliance. But let me give you the mission of the IRS. The mission of the service is to encourage and achieve the highest possible degree of voluntary compliance with the tax laws. Well, if they're based on voluntary compliance, it means if you don't want to comply, you don't have to comply. If you were going down to the Department of Motor Vehicles, and you know that book that they give you when you study to pass, you know, besides the field driving test, there's this manual. You have to stop at a stoplight. You can only pass. You know that little manual. Suppose in the front of that manual it said, "These rules and regulations are based on voluntary compliance." What would that tell you? If Moses believed that the 10 Commandments were based on voluntary compliance, he would have named them the 10 Suggestions. The point is, there's no such thing as voluntary compliance. If something is voluntary, it's voluntary. And if you have to comply, you have to comply. The government attaches compliance to voluntary to hide. They don't want to come right out and say it's voluntary. However, sometimes they actually do that. Now, on page 12 of this book, Federal Mafia, I actually reproduce, you'll see, those of you who have your books, you can check it. You can check it right along with me. On page 12, there is the annual report put out by the Commissioner of Internal Revenue. At the time, Jerome Kurtz was then the commissioner. And you will see that in connection with the income tax, he says no less than 6 times that the payment of income tax is voluntary, voluntary, voluntary. Now, do you think that Jerome Kurtz doesn't know the meaning of the word voluntary? You can see on page 13, there's a training syllabus that the government would send to high schools. And you'll see where the arrows are. The term voluntary compliance. 3 times compliance is voluntary. Now, if you turn the page, as a matter of fact, on page 16, and you'll notice in the book, The Federal Mafia, I reproduced documents. One of the reasons why the book is a manual size, it allowed me to reproduce the actual documents. Because if I told you what was in the documents, you wouldn't believe what I would have told you. Because in figure 1.5, there is the actual transcript of the testimony being given by Dwight Avis, who was then head of the Alcohol and Tax Division of the IRS. And he's testifying in front of the committee. And look what he says. Your income tax is 100% voluntary, and your liquor tax is 100% enforced. Now, the situation is as different as day and night. So, here's document after document saying that the income tax is voluntary. My first book was called The Biggest Con, How the Government is Fleecing You. I approached the payment of income tax from an economic standpoint. I try to show how income tax would literally undermining America's industrial strength. The former Chief Justice, John Marshall, said the power to tax is the power to destroy. And the government is literally destroying productivity by taxing it. You know how the government wanted us to smoke less? So what they want to do, they want to put a tax on cigarettes so people won't smoke. Well, a tax on income is a tax on productivity. And if you tax productivity, you get less productivity. And therefore, we have a lower standard of living. Before the income tax, which really went into force in 1943 with withholding taxes. But in 1939, Americans, women didn't work. All of our products that went into a store, they were all made in America. America was the U.S. currency was regarded as the most reliable of all currencies. We were the world's mightiest creditor nation. Since we've had the income tax, we're now the world's biggest debtor. Very few products you'll now find made in America in our store. The dollar has probably lost 95% of its value since 1939. This is what the income tax has done, because it follows John Marshall's observation that the power to tax is the power to destroy, and that's what the government's been doing to our standard of living, destroying it by the abusive imposition of the tax. So when I saw all of these documents, that payment is voluntary based on voluntary compliance, I don't want to pay income taxes, but I thought I had to by law. I was writing a book on taxation, shown from an economic standpoint, and I saw all these documents on voluntary compliance. So I called the IRS. I spoke and I said, "Is income tax based on voluntary compliance?" And the man said, "Yes." And I said, "Well, I don't want to volunteer anymore." And he said, "Well, you have to volunteer." Now, I had just gotten out of the Army a few years before. They tell you, no, never volunteer. So I said, well, if it's voluntary, why do I have to volunteer? And he said, well, it's like stopping at a stoplight. This is what they tell you. If you stop at a stoplight, you do it voluntarily. If you go through, you get a ticket. I said, no. I don't stop at a stoplight voluntarily. I think if I don't stop and a cop sees me, I'm going to get a ticket. It's not voluntary. By that token, murder is voluntary, because the government is not sending somebody alongside you to keep you from shooting somebody. Or how about selling drugs? Is that based on voluntary compliance? The FBI say that our drug laws are based on voluntary compliance? Why is it only the IRS says income tax are based on voluntary compliance? And if you ask your accountant or tax lawyer, well, isn't it based on voluntary compliance? They'll say yes. Well, it's voluntary in the sense that the government doesn't come down and make you fill out a tax return. And I always say, in other words, filling out a tax return is compulsory and not voluntary. Is that right? Well, yeah. So every time the government says it's based on voluntary compliance, they really mean it's based on compulsory compliance? Is that what you're saying? Then why don't they just say it's based on compulsory compliance if it's compulsory? The word voluntary would have absolutely no meaning if it really wasn't voluntary. So here you have a nation of 100 million Americans actually believing that something is compulsory, even though the government tells them over and over again it's voluntary. Okay, now we're going to explain. Now here is a letter that I got from Congressman Dan Burton. I get more and more people to write to their congressman saying, what section of the law requires me to pay the tax, or what section of the law makes me liable. Remember the word liable, it's very important. So here's a letter from Dan Burton in which he actually tells a constituent that he could find no provision in the law that makes you liable. From a congressman. Here's a letter from John Ensign. He was on the House Ways and Means Committee. He was a congressman from Nevada, as a matter of fact. Let me read what he says. Let me start off by saying I cannot point to a specific place in the law where it says you must pay income taxes. Okay, what caused John Ensign ultimately to have to admit in a letter, which he was obviously reluctant to admit. As a matter of fact, the rest of his letter he tries to confuse and blow smoke in your face by saying, why, we do have a voluntary tax system in the sense that the payment of income tax is optional. There are specific provisions of the law which require the payment of income tax. You see, that's double talk. Because if there was a specific provision of the law to pay the income tax, why didn't he identify it? So the rest of his letter is double talk, like most of the letters you get. Like Dan Burton's letter, the rest of the letter is double talk. He first answers the question and then tries to tell you why it's not significant. Okay, now what happened here is I took, let me see the date, in November 6, 1997. I took a half-page ad in the Las Vegas Review-Journal. It was an open letter to Harry Reid, Richard Bryan, John Ensign, and Jim Gibbons, who were the two congressmen. And I said, if they would have a town hall meeting, I would pay $50,000 to any charity of their choice if they could produce a statute making Americans liable for income tax or requiring them to pay it. And I would donate $50,000 to charity, and I would pay the cost of the town hall meeting. And we faxed these letters to their offices. Well, obviously, they couldn't produce any such statute. And at a town hall meeting that John Ensign himself had scheduled about 2 weeks after the ad came on, he had a meeting, and at that meeting, at least there was 300 people at the meeting, and about 5 people reminded him of the ad and was pressing him to identify the law that required people to pay income taxes. He first said, well, you know, I'm not a lawyer, as if you got to be a lawyer to know whether you got to pay income taxes or not. And he had the services of the Congressional Research Service. But what's funny about it, there was a reporter from the Las Vegas Review-Journal, and there was no mention of that town hall meeting in the newspaper, because the reporter would have been forced to report on by the fact that John Ensign couldn't produce a law that required you to pay income taxes. And as a matter of fact, we had trouble even getting this letter after we reserved the space into the Las Vegas Review-Journal. As a matter of fact, when the Las Vegas Review-Journal accused me in an editorial of inviting people to break the law, we called and I said, look, because I have a radio show, of course, in Las Vegas, and I said, look, just produce a law that requires people to pay income taxes, and I'll apologize, call in all my books, and I'll get off the and get a job at McDonald's. And I had more and more people calling the Las Vegas Review to produce the law, and finally they got so irritated, they said, look, you got to pay your income taxes, and that was their answer. But they couldn't produce the law. Okay, so, yeah. And this is one of the reasons, of course, why the American public doesn't know any of this. I just came back from, I was in Portland, Oregon, and I actually had a scheduled meeting with the reporter, the tax reporter at the Oregonian. And the day before the interview, he called to cancel the interview because apparently the head of the business department, and they didn't want that interview. I've actually been interviewed by newspapers thinking that a lot of this stuff I'm going to tell them is tax protest, kooky stuff, and they don't even report it. Sometimes they even deny I was ever there. So this is why the American public is really in the dark, because the traditional media, especially print media, doesn't want to print any of this stuff. Okay, so now, is there anybody here, after all of these documents, is anybody here who doesn't believe the payment of income tax is voluntary? I've given you government document after government document. We've shown you letters from congressmen. Now, the trick is, even though you know it's voluntary, that's not going to protect you. You have to develop procedures for protecting yourself from a crooked and criminal government. What's the title of my book?
The Federal Mafia.
The Federal Mafia. Now, anybody who reads my book and is familiar with this does not consider that title to be an exaggeration, because the back of my book, of course, says, a book that will convince you that organized crime in America begins with the federal government. The federal government has been literally extorting income tax from the American public, also running the world's biggest counterfeit ring, because all U.S. coin and currency is counterfeit. The Constitution requires only gold and silver. And you're going to discover, unfortunately, Social Security is a chain letter. There are no trust funds, even though they claim there are trust funds. There are no trust funds. And, of course, the IRS runs the world's biggest fence. All articles seized by the IRS are stolen from the people because they weren't required to pay income taxes, so it's all stolen. And when they sell it, they're selling stolen articles. So the federal government runs the world's biggest fence. Okay. Now that you are all agree that the income tax is voluntary, everybody agree?
Yes.
Okay. Now let me tell you why it's voluntary. For those of you, I'm going to explain why it's voluntary. And again, I know a lot of people are bewildered, because over and over again they're going to say, well, if it's voluntary, why do people go to jail? Why do people have their houses seized, bank accounts? How could 3 million Americans have their wages seized? Oh, incidentally, their wages were not seized. The IRS didn't go to their employers and seize it. The employers mailed those checks because they got a phony notice of levy, which we're going to talk about. But it's the lawyers for these firms that told these firms that they had to send these checks to the IRS. Lawyers. Now, before I even proceed, I want to tell you the most important aspect of the Constitution is what we call the Due Process Clause of the Constitution, which says you cannot to be deprived of property except pursuant to due process of law. Now, due process means a hearing. Presumably, if you lived under Attila the Hun and Genghis Khan, if Attila the Hun rode through a village over which he had control, presumably if he saw something belonging to a peasant, he could just grab it. Maybe even he couldn't, I don't know, but I assumed he could. What could the peasant do about it? Nothing. And getting a Attila the Hun. But presumably we're not living under Attila the Hun. Presumably the government can't see our property and grab it because of the due process clause of the Constitution. It says you can't be deprived of property without a hearing. Now you know all those 3 million paychecks? There was no hearing, there was no court order. The government is, you might as well be living under Attila the Hun and Genghis Khan. And which is the Supreme Court, and we have law schools, and we have lawyers, and ask them, how can the government seize property without a court order or a hearing? And they're getting away with it. But they're having a more and more difficult time. As a matter of fact, the front page of the Wall Street Journal has been a couple of articles about the increasing numbers of people who are not paying income taxes. Because they're discovering, indeed, it is voluntary. And they're following procedures that we've developed that enables them to stop paying income taxes without taking the risk that a number of us took years ago when we didn't file altogether. In any case, let me prove to you very quickly, if I haven't proved to you already. Because right here on page 33 of the Federal Mafia, I have an excerpt from the Handbook for Special Agents. This is the IRS's own handbook. And I'm going to read from paragraph 342.12. It says, an individual taxpayer may refuse to exhibit his books and records for examination on the grounds that compelling him to do so would violate his right against self-incrimination under the Fifth Amendment and constitute an illegal search and seizure under the Fourth Amendment. So here is the IRS's own handbook saying that you cannot be compelled to turn over your books and records. When you do it, you're waiving your Fourth Amendment right. I have a Constitution. I published the Constitution. It's called the Tax Rebel's Guide. It's the only color-coded Constitution. And let me read you from the Fourth Amendment. Now, think of all the people who go down to IRS offices with their books and records. Sometimes they haven't come back for month after month. Bring your, if you say you have 3 dependents, sometimes if they want what they call a TCMP audit, they can ask you to bring down birth certificates, marriage licenses. They want to see all your documents, right? Let me read the Fourth Amendment to the United States Constitution. The right of people to be secure in their persons, houses, papers, and effects against unreasonable searches and seizures shall not be violated. And no warrant shall issue but upon probable cause supported by our oath or affirmation. In other words, the government has no right to see your papers. If the government comes and they want to search your house, they just come in and say, we want to look around, we think you've done something wrong, maybe you have some contraband, we want to look. No. In order to come into your house and get a search warrant, they're going to say, no, we think he has counterfeit money, we think he's keeping it here, we think he has a weapon. If they come in and just walk around, that's a fishing expedition. They have no right to walk around your house and see if you've done something wrong. Now, when the IRS audits you and they look at your books and records, they don't know you've done anything wrong, yet they want to see if what you reported on your tax return fits what your books and records are. Now, we're going to teach you how to file a zero return, how to pay no income taxes. And some people will say to me, well, do you think I can get away with it? Or they think they're taking a risk. All right. Leona Hemsley paid $50 million, listened to her accountants and lawyers, filed a tax return, turned over her books and records, and what happened to her? She went to jail. She went to jail because she listened. You're going to find out how she could have stopped that just by adding a little thing to her tax return. How about Pete Rose? He listened to his accountants and lawyers, paid $100,000, and he went to jail. That shows you how dangerous it is filing a traditional return. Now, you might say, well, they didn't tell the truth on their tax return. Well, I'm not sure if they did or they didn't. But I know 2 people, Don King and Jerry Lee Lewis, the band leader. They both were charged with tax evasion also. Cost them both over $200,000 to defend themselves, and they were found not guilty. So here's the jury saying, hey, the information in their tax return wasn't false, but that didn't prevent them from being prosecuted. And while most of the people who are charged with tax evasion get convicted, a number of people are found innocent. So that's proof that the government can prosecute you with your own tax return, even if the information is not false. So that shows you, but by filing a tax return the way we're going to show you, that can never happen to you. The point is, you are waiving your Fourth Amendment right when you turn over your books and records. Their own documents say it. Now, it doesn't say in this handbook that when you turn over a 1040, you're also waiving your constitutional rights, but you are. If the IRS admits in this handbook that you can't be compelled to turn over your books and records because it would violate the Fourth and Fifth Amendment, right? Could you be compelled to turn over a condensation of your books and records? No. Well, a 1040 is nothing but a condensation of your books and records. And once you file a tax return swearing that this is what your income is and this is what your deductions are, if you don't prove your deductions, they'll disallow them and hit you with a higher tax. So once you file a tax return, you're compelled to waive your Fourth and Fifth Amendment rights in order to get the deductions that you claimed on your 1040. And of course, right in the 1040 itself, which I have right here, there is a Miranda, we talked about, there is a Miranda warning, which says that all information you give us, we can use against you. So by giving them the information, you're simply waiving your Fifth Amendment right. In the same manner that when somebody's arrested, they read the Miranda warning, and then the cop starts asking them questions. Can a cop ask an individual incriminating questions after he reads them the Miranda? Yes, as long as you told him he doesn't have to answer. If he's foolish enough to answer, he's waiving his right. So everybody waives their Fourth and Fifth Amendment right when they file a tax return. But does the typical accountant or lawyer say, now you realize by filing a tax return you're waiving your Fourth and Fifth? Is it okay with you? Do they say that? Of course not. Now, okay, now let me prove to you very, very simply, if this hasn't already done it, that you don't have to pay income taxes. Many people think, well, the 16th Amendment, the 16th Amendment. The 16th Amendment has nothing to do with whether or not you owe a tax. The 16th Amendment was an enabling statute, which we may have time to get into. My book explains extensively the 16th Amendment. Whether you owe a tax is based upon the current Internal Revenue. And this is the 1998 edition of the Internal Revenue Code. I think I'm the nation's leading sellers of Internal Revenue Code. I believe if you, and we tab it and we color code it and I highlight it. And I believe if anybody has a confrontation with the IRS, the best thing is to go in with the code.
You say Title 20 or Title 26?
Title 26. Thank you. Title 26. Because when you go into an IRS office and you hold up a code to an IRS agent, it's like holding up a cross to a vampire. And now 60 Minutes had a segment on the IRS last year, and they had about 10 agents, if you saw the show, in silhouette. And the agents were saying how they're taught to lie and mislead the public. They admitted that. Well, of course they're taught to lie and mislead. Anytime an IRS agent tells you you're required to pay so much in taxes, John Ensign already said there's no law that requires you to pay. So all they can do is based on intimidation. We go up there with the tape recorder and the law, and they can't lie to us, so they're very fearful of people who know what we know. They can't get away with those lies, what have you. Now, but here is proof positive. And proof positive that most of the federal judges, and I had the honor of being nominated for President of the United States at the Libertarian Convention in 1996. And I said something. I said, if the American public knew what was going on, practically every federal judge in the country would be behind bars. That sounds inflammatory. It sounds irresponsible. And on the rebroadcast, I said that during a debate between the candidates. C-SPAN bleeped it out of so I have the honor of being bleeped out from a political convention. You couldn't hear what I said. Now, let me prove that to you. If you take the Internal Revenue Code and you look in the index, it has nothing to do with the 16th Amendment, because all taxes that are required to be paid are contained in the Internal Revenue Code. Now, there's an index in this code, and I just went to alcohol taxes, and you will see there are three subheadings: liability for, payment of, and penalties. So if I were if I distilled alcohol, and I could say, well, where am I liable for the tax? Section 5143. What section requires me to pay it? 5142. And penalties. As a matter of fact, I have all of these red codes on my tab cover taxes for which you're required to be paid. For instance, Section 5703 has to do with tobacco taxes. And let me read what it says. The manufacturer of or importer of tobacco products and papers shall be liable for the tax imposed, and such taxes shall be paid on the basis of a return. Now, you can ask any accountant or lawyer, show me where in the code there's a provision where it says those people who have income shall be liable for the tax and shall pay the tax on the basis of return. It's not here. And as a matter of fact, I've heard funny stories. One man called my shortwave show and said he went to his tax lawyer who'd been doing his taxes with the code. And he said, you know, I got in Irwin Schiff's material. He says, show me what law in here says I got to pay the tax. You know what the tax lawyer said? It's an unwritten law. So my son Peter then said, well, ask him what year the unwritten law was enacted. I myself, we had some fun with this on my radio show, and I said, yeah, if you walked into his law library, it'd be a bunch of empty shelves. That's for all the unwritten laws that he keeps track of. The fact of the matter is, here is tobacco taxes, and you'll see in the tobacco tax section, liability for tax, penalties. Penalties is very important. There has to be a penalty section, because if there are no penalties, there's no law. And penalties are very important. For instance, suppose a municipality passed a law saying it's illegal to spit on a sidewalk, but there's no penalty, no fine, no imprisonment. There has to be a penalty. Now, in the code, there's what we call occupational taxes. And again, under occupation, you know, if you met gun manufacturers, bookmakers, liability for, payment of, penalties. Penalties are very important. Now, in the code, there is an income tax section. Here it is. Now, if you go to the income tax section, here it is, the income tax section, there are 3 columns. And you will not find in there any entry for penalty, payment, or penalties. Liability, rather. There is no section for liability, payment, or penalties. Now, what would that tell you? There is no law. Now, this is very important because we use this. This is very important. In the index here, we actually have a section that says liability for tax. And you could see all the taxes for which you could be liable. Occupational taxes, aviation fuel taxes, cigars, excise taxes, distilled spirits, employment taxes, firearms taxes, foreign insurance policy taxes, highway motor vehicle. I know you're not going to believe me, so I'm going to ask this young lady right here to look through here and see if you can see an entry for income tax.
Not yet. Nope.
So what does that tell you? That you can't be liable. Okay, now it's voluntary, but it's very important. That is very important. So there's no entry there for liability for tax. So no one's liable. But that's very important. I'm going to tell you why in a minute. As a matter of fact, there is even another section in here dealing with payment of tax. And they list a number of taxes, but they don't list income taxes. Okay. Now, remember I told you, remember the word liability. I just showed you in the code liability, and there is no provision for having an income tax liability. That is very important because, here's why. Here is where the government actually tells you you don't have to pay income taxes. They literally tell you that right in the 1040 booklet. Because in a 1040 booklet, you have, I'm going to go back to the Privacy Act and Paperwork Reduction Act notice. This is the only official page in a 1040. All of the rest of the 1040 is designed to mislead you into thinking you have to pay the tax. But officially, the government has to, there was a Privacy and Paperwork Reduction Act notice passed by Congress. And what that said is this: any government agency that asks you to give them information, number one, must tell you whether giving the information is voluntary or mandatory. Otherwise, any bureaucrat can send you a letter saying, tell us all of this stuff, and how would you know whether you had to do it or not? And they have to tell you whether giving the information is voluntary or mandatory, and they got to tell you what will happen to you if you don't give it. And when they submit it to they get what is known as an OMB number, and I'll show you where it is on a tax return. In my book on page 274, you will see a zero return how I fill it out, but up in the right-hand corner of the tax return, you see an OMB number right up there. Now, if you ever get a letter from the IRS or the government asking you for information, if there's no OMB number on that document requesting information, it is actually a bootleg document. And in the law, it's identified as a bootleg document. In other words, how would you know if some bureaucrat sends you a letter whether you have to give them back the information? No. If there's no OMB number on that document, and if they don't tell you whether the giving the information is voluntary or mandatory, you can throw it in the ash can. Now, to show you how fraudulent the Privacy Act and Paperwork Reduction Act notice in the 1040, to show you how fraudulent it is, let's compare it to one that's honest. And that's this Form 730. A Form 730 is the return that bookmakers fill out to pay the federal wagering tax. There is such a thing as if you're a bookmaker and you take in $100,000 worth of bets, you're supposed to pay, I think, 2%. And bookmakers pay a tax on their gross wagers. Now, when the tax was first passed about 25 years ago, the Supreme Court ruled that the federal wagering tax on bookmakers was illegal, because while being a bookmaker wasn't a federal offense, if a bookmaker paid the tax, that information could be made available to the states, and he could be prosecuted under state law for being a bookmaker. So the Supreme Court declared initially the federal wagering tax unconstitutional. So then, in order to collect the tax, what the government did is told the bookmakers that the information they provide cannot be used against them. So right on the federal wagering tax return, it says the information may not be used against the taxpayer in any criminal prosecution. So what the government would have to do if we really wanted to make the payment of income tax compulsory is say the information can't be used against you. So that's proof there's a big difference between a compulsory tax that you'd have to pay. If you have to give the government information, you want to read it? Somebody may not believe me. See what it says right there?
May not be used against the taxpayer in any criminal proceeding.
Okay. Now, Leona Hemsley, of course, the first document the government introduced and used against her was a tax return. Now, Leona Hemsley was prosecuted because the government said she did not report on her tax return some $3 million that her businesses spent fixing up her house in Greenwich, Connecticut. Therefore, her tax return was fraudulent. Now, let me tell you very quickly how her lawyer could have stopped the prosecution. In order to prosecute Leona Hemsley, they had to put her tax return in, right? Now, only information voluntarily given can be used against you. In other words, suppose the government twisted my arm, and I confessed to something, because they were going to break my arm off, and I confessed. Is that confession worth anything? No. It was under duress. Now, Leona Hemsley believed that if she didn't file, you believe if you didn't file, you'd probably go to jail for not filing. Is that right? That's what most people believe. Yeah, most people believe that. And I went to jail, as a matter of fact, for not filing. And a lot of other people went to jail for not filing. And as a matter of fact, a number of people in New York, in the Second Circuit Court, in the Second Circuit where Leona Hemsley was prosecuted, the judges in the Second Circuit, which is the worst circuit in the country, said that it's not a return unless it contains information from which a tax can be computed. You see, in those days, I had filed Fifth Amendment returns. I took the Fifth to all that information, knowing it could be used against me, because there was a case in 1928, and Oliver Wendell Holmes said you could take the Fifth, since all information could be used against you. But modern judges disregard and they misstate what Oliver Wendell Holmes said. What they said, what Oliver Holmes said, is that you can only take the Fifth in connection with the source of your income. But you had to report the income itself. Now, I want to show you how silly this is. How many people know who Aldrich James is? He was the spy who worked for the CIA, but was also a Russian spy. And one year he got $1 million from the Soviet Union. Now, a lot of people don't know, but it was reported in the paper that Aldrich James was convicted not only of espionage, but tax evasion, because he didn't pay taxes on the $1 million that he got from the Soviet Union. Now, how could Aldrich James have reported that money so he wouldn't go to jail for tax evasion? He would have had to report it. So presumably Aldrich James, who worked for the CIA, would take his tax return and say, okay, I got $75,000 from the CIA, whatever their salary is, and I got $1 million from the Soviet Union for selling them secrets. Now, could he have done that? Could he have? Well, don't you think his bosses at the CIA would be on him the next day getting him for espionage? Well, how could he have reported it? Now, you know what our judges would say he could have done? He didn't have to report the source. So presumably with Aldrich James, according to our judges, he said, I got $1 million miscellaneous.
Fell out of the sky.
Yeah. Well, don't you think they'd be on him the next day? What do you mean miscellaneous? Where'd you get it? Well, I had some cash stands in these, what do you call these out there markets, these flea markets. And even if he wanted to pay the tax, what account would he write a check against? The whole thing is ridiculous. And Pollard also, who was a spy who sold secrets to Israel, presumably, he also was charged with tax evasion, as well as espionage. How could he pay the tax on the money he received? I'll show you how ridiculous. And John Gotti, remember, he was prosecuted for tax evasion. Now, how could Gotti, suppose Gotti spent $3 million buying dope, and he had, and he said he got $20 million for it, but he had 3 assassins that wiped off, he paid $75,000 to assassinate. He had 15 cops on the payroll. What was he supposed to send everybody a 1090? I mean, how could he fill out a Schedule C and report that illegally? And nobody bothers to point out that how nonsense this all is. Because suppose the U.S. Congress, could the U.S. Congress pass a law saying that if you commit a crime, you have to report the crime you committed, and if you don't report the crime you committed, if we catch you, we're going to prosecute you for the crime you committed and for the crime of not reporting the crime you committed. Could the U.S. Congress pass such a law? Of course not. Well, how could they pass a law telling you got to report money you may earned illegally? How can you report illegal income without admitting you committed a crime? There's no way you can report illegal income. Now, which is voluntary. So now, does that mean the law? Does that mean that the law is wrong? The law is not. No, because the law says you don't have to report either legal income or illegal income. Could we have a law that says you got to report illegal income? It would be unconstitutional on its face. Okay. So here is the tax return. It's a Form 730, and this is the Privacy Act notice that bookmakers get. Now, will you verify that their Privacy Act notice sends no less, you got to file a Form 730, you got to file a Form 730, and you got to file a Form 730. So bookmakers are told that they got to file a Form 730. If you look at the Privacy Act and a 1040, there is no mention here you got to file a 1040, so how would you know you got to file one? Whoever told you you got to file? You're going to find out that if you're required to file one, the government has to send you a notice, a specific notice. But if I ask people, who told you you have to file a 1040? Usually, well, my father. He did it, and he told me. Or I heard a TV commentator said, hey, it's tax deadline, you got to file your tax return. But, yeah, well, who are they? How would you know you got to file it? Does the government tell you in the Privacy Act that you have to file a 1040? No, it's not there. Now, in addition to everything, on the Form 730, which bookmakers use, it says you must file a Form 730 and pay the tax on wagers under Section 4401. So they identify the specific law where bookmakers have to pay the tax, and later it says, and Section 4412 makes you liable. So bookmakers are told the form they got to file, the provision of the law requiring them to pay, and the provision of the law that makes them liable. And they're told that all information they provide can't be used against them. Now, Americans, on the other hand, are told all the information you provide can be used against you. In addition, there is no mention here that you got to file a 1040. And now I'm going to show you there are 3 places on here where the government tells you you don't have to file. The first place is when they read you a Miranda warning. The minute the government tells you, we're going to use all this information against you, that's tantamount to telling you you don't have to give us the information. But let's see how the government deals with the question of liability and payment. Does the government come out and says, hey, there's no law saying that you have to file? No. What they have to do is confuse you into thinking there must be a law requiring you to file and pay. So here's where they do it, and they do it right here. They say our legal right to ask for information is Internal Revenue Code sections 6001, 6011, and 6012. And their regulations. Now listen to this. They say you must file a return or statement for any tax you are liable for. You must file for any tax. They don't say you must file an income tax return pursuant. You must file for any tax you are liable for, but they don't tell you the code section that makes you liable. Now, as bookmakers are told, the code section that makes them liable is section 4412. So they're telling you right here that you got to file a return for any tax you were liable for. Is that right? So now you go to the code and you look for liability for tax, right? And you find out what tax you might be liable for, right? Do you manufacture alcohol? So then you're not liable for alcohol taxes. You manufacture cigars or cigarettes? No. How about you sell foreign insurance policies?
No.
Well, can you? How about tobacco products? Well, can you find any tax? Can you find an income tax there? You looked before and you couldn't find it. So if the government tells you right here that you must file a return for any tax you are liable, and you go to the code and you can't find where you're liable, what has the government just told you? You don't have to file. Now, there's no liability. Now, in other words, and I'll tell you something else, none of these particular sections, sections 6001, 6011, 6012, have anything to do with income tax, as a matter of fact. If they did, they would be in subtitle A. You see, the income tax, the Internal Revenue Code is divided into subtitle A, B, C, D, E, F. Subtitle A has to do with income tax. So any provision having to do with the payment of income tax would be in subtitle A. None of these provisions are in subtitle A. I know I digressed a little bit, and I'm reminded I never finished explaining how Leona Hemsley's lawyers could have stopped her prosecution the first day it opened. Because in order to prosecute Leona Hemsley, they had to get her tax return in. And the only information you can use against anybody in a criminal trial is information given voluntarily. Now, we all know that Leona Hemsley believed she was required to file. Matter of fact, I went to jail myself for not filing, and the Second Circuit Court of Appeal, in sustaining my conviction, said that you have to file a return and give information to the government from which a tax can be computed. Leona Hemsley might have even read about me going to jail for not filing. So she believed she had to file, and I'm sure her accountants and lawyer told her she had to file, and she believed she was required to file, as most people believe. So, suppose her lawyer, when they went to introduce her tax return, said, well, Your Honor, Miss Hemsley introduced this, she filed this return because she was required to file, and therefore all the information is compelled, and therefore it cannot be used against her. What would the judge have had to rule in order to get a return in? He would have had to rule she filed voluntarily. And then her lawyer could have said, yeah, but in the case of Irwin Schiff, you said he was required to file unless it contained information. And the lawyer could have had 4 or 5 cases in the Second Circuit where they said you're required to file. He could have kept her return out, and her trial would have collapsed. She never would have gone to jail where she's a felon. But why didn't her lawyer do that? Very simple. Then the lawyers wouldn't have made the $10 million they made because she went to trial and she had to file an appeal. You mean to tell me that her lawyers didn't understand that they could have used that against her? But I told you, the income tax supports half the lawyers in this country. Not only tax lawyers, but bankruptcy. People go bankrupt because they have no money, have to pay their income tax, divorces, commercial law. And I'm saying if there were no income tax, half the lawyers in this country had to look for other jobs. So that's how they could have stopped Leona Hemsley's trial from taking. They could have collapsed the first day it opened. They used against Leona Hemsley information that she was forced to divulge. Just like putting somebody on a rack, getting the information from them, and then using it against you. That's our honest government. Okay. Now, the government does here mention 3 code sections. And this is, of course, all done to mislead you, because under the paperwork, they're supposed to tell you if filing is voluntary or mandatory. They don't have to give you all this gobbledygook. They give you the gobbledygook to confuse you. First of all, they use the phrase, our legal right to ask for information is Internal Revenue Code section. You think the government needs a law to ask me anything it wants? Of course not. Can you have a right to ask me anything you want? Of course. But I'm not legally obligated to answer. So the government wants the public to confuse their legal right to ask with your legal obligation to answer. And of course the government has a legal right to ask for anything it wants. The question is, I'm not obligated to answer. But they figure, oh, our legal right to ask is Code Section 6001, 6011, and 6012. Now, another reason why the government does that is that they know nobody has an Internal Revenue Code. Nobody's going to check the section. However, in my book, I reproduce these 3 sections. Now, these 3 sections are very important because they tell you don't have to file or pay income taxes. Now, when I put these sections in the book, and this book was last updated, this book was, well, when I did the book myself, these 3 sections are included in a chapter. They included in Chapter 3, entitled The Internal Revenue Code, a Masterpiece of Deception. So, frankly, in trying to mislead the American public into believing they're required to file, the government mentions 3 sections. All of them have absolutely nothing to do with the payment of income tax or liability, as the letters, of course, from John Ensign and Congressman Burton have already established. So here's how the government misleads the public. They know you're not going to check these sections anyway, but assuming you did, and when I wrote my book, I went through these code sections, and I started to read Section 6001. Now, there are people here who didn't know the first thing about income tax when they came in. Now you should have enough knowledge to be able to recognize why a law the government tells you to apply to income tax doesn't apply to income tax at all. And how would you know that Section 6001 doesn't apply to income tax?
Well, in the third word, it says every person liable for any tax.
Liable for any tax. So this could apply to bookmakers for the wagering tax, tobacco liability, but it can't. The word income tax, the income doesn't even appear there. So it obviously doesn't apply to income tax. So a code section that they put in the 1040 booklet, which presumably applies to income tax, doesn't apply to income. This is mail fraud. When the government prosecutes people for mail fraud, they wrote the book on mail fraud. Okay. This is very important. We're going to come back to it again. Let's go to the next section, Section 6011. How do you know that Section 6011 doesn't apply to income tax? Read it. Read the first line. When required by regulations prescribed by the Secretary, any person made liable for any tax, could you be made liable for income tax? No. I didn't get an answer yet. Can you be made liable for income tax? No. We just checked. So neither of these 2 sections, right, apply to income tax. So let's check the 3rd section mentioned in the privacy, Section 6012. You see it there. It says, now there's no mention of liability or payment in Section 6012. And all Section 6012 says is that tax returns shall be made. The word shall, if you check a Black's Law Dictionary, is not permissive. It can be may. It can be interpreted as may. And it doesn't say if you file you have to pay a tax, nor does it say if you don't what the penalty is. In the Internal Revenue Code, if they tell you you have to do something, usually in the same code section, they tell you, and if you don't do it, here are the penalties. So nowhere in Section 6012 are you told you have to pay the tax. Nowhere in Section 6012 are you told you're made liable for the tax. Nor are there penalties for not filing. And neither Section 6001 and Section 6011 even mentions income tax. So none of the sections that the government puts in the Privacy Act pertain at all to income tax. And therefore, the people who write this for government should be prosecuted for mail fraud, among other things. Okay, but how can we use these sections for our benefit? Now, many of you, and people are going to watch the video, many people don't file. We're going to show you how to file a zero return and try to get all the money back you paid. But many people don't file. And when I go around the country sometimes, somebody will say to me, well, I haven't filed. And I ask them, well, why haven't you filed? And an answer you can get is, well, 5 years ago I got sick and I didn't have the money to pay, and I thought I was going to pay next year, and I didn't get the money, so I didn't file the following year and the following year. And when I meet these people and I say to them, and you worry about that fact that you haven't filed and paid, and many of them say that's the last thing I think about when I go to bed at night and the first thing I think about in the morning. And they're fearful one of these days the IRS is going to catch them. And a few dramatic times I've told people, I said, well, you know why you haven't filed? Because the secretary never sent you a notice that you had to file. Now, in the Internal Revenue Code, in section after section, they always talk about the secretary. You'll always see the secretary, and that means the secretary of the Treasury. And in order for an IRS agent or anybody else, they must have what is known as a delegation from the secretary to do what the law says to do. But they never have a delegation of authority. But in any case, if you go to Section 6001, if you drop down to the 5th line, let me read it. It says, whenever in the judgment of the secretary it is necessary, he may require any person by notice served upon such person or by regulation to make such return, render such statement, and keep such records, as the secretary deems sufficient to show whether or not such person is liable for the tax under this title. So what does this tell you? This tells you before you can, if you have to file, you don't listen to some TV announcer saying, hey, you got to file because it's a deadline. You don't listen to your mother and father because they filed. If you're supposed to file a tax return, you're supposed to be served with a notice. Technically, that means by hand. At the very least, it's a certified letter. This is not giving you notice. So I tell those people who haven't filed, many people say it's voluntary or I object to the money, the way it's spent, whatever. No. The reason why you haven't filed is you never got a notice. Now, I went to jail for failing to file, and most of the people who went to jail didn't know about that section. I didn't know about that section because I never read into the section. The minute I read every person liable, I never bothered reading the rest of it. It was only because I read a court decision in which they talked about giving notice. I said, hey, wait a minute. And I finally read it, and I said, there it is. You got to be served with a notice. So for those people who haven't filed in the past, if anybody asks you, if you get a letter from the IRS, why haven't you filed, which is what they do, say, I never got a notice served to me by the secretary pursuant to Section 6001. Now, there's another thing, and there's another thing that is not in the book, which I only discovered in the last 6 months. And this is probably one of the most important discoveries I ever made. Well, I was the one who discovered in 1983 that there was no provision in the law requiring you to file. Not requiring you to file, requiring you to pay the tax or establishing a liability. So those were tremendous discoveries. And I'll tell you how I discovered it. Well, we're going to go back to the wagering tax that I talked there, the bookmaker tax. And the wagering tax is imposed in Section 4401. And it's only a page and a half. And one day I'm reading the federal wagering tax. It's only a page and a half. And it says persons liable for tax. It says each person who is engaged in the business of accepting wagers shall be liable for and shall pay the tax. And it says record requirements, that they're required to keep records. And then it says for criminal penalties, see subtitle F, where they put the criminal penalties. So I said, gee, it says any person liable for the tax shall pay the tax, and they set up a requirement for records. And I said, let me go to subtitle A here and see if I can find comparable sections. And I couldn't find it. That's when I discovered there was no law making you liable, there was no law requiring you to pay, and there is no law requiring you to keep books and records for tax purposes. You see, all the blue tabs that I have here set up record requirements for various kinds of taxes, tobacco taxes, wagering taxes, but there's no blue tab in subtitle A. So anyway, so the first thing we discovered, so I just told you that the government tells you 3 times you don't have to file. They tell you here, because they read your Miranda warning. They tell you all the information you're going to give the government they can use against you. That's tantamount to telling you don't have to file. They tell you you only have to file for a tax for which you're liable, and you can't find out when you're liable. And they also tell you, by directing you to Section 6001, that you don't have to file unless you get a notice for the second. Incidentally, what are the 3 most important sections of the Internal Revenue Code? There's about 1,500 sections. But what are the 3 that are most important? The 3 mentioned by the government, 6001, 6011, and 6012, because those are the sections that they direct your attention to. When we point out today, and we have litigation against the government, and we point out that there's no law making us liable, requiring us to pay, some of the courts are saying, well, Section 1 of the Code imposes a tax, and Section 1 of the Code does impose an income tax. But why is Section 1 of the Code unimportant with respect to the payment of the tax? The answer is, if it was important, it'd be mentioned in the Privacy Act. When you ask the government, well, tell me, what law says I have to pay the tax? They'll mention Section 61, which attempts to define income, which doesn't do it. Or they'll mention other sections. But all of these other sections that they mention, if they were relevant to the payment of income tax, would have to be mentioned in the Privacy Act. So the only three sections the government directs your attention to, Section 6001, 6011, 6012, and none of them tell you have to pay income taxes or file tax returns. And as a matter of fact, they tell you if you're required to file, the secretary has to send you a notice. But there's another thing that they tell you, which I overlooked until about 6 or 7 months ago. I sell the Internal Revenue Code. And these are the statutes. And I always thought the statutes were important. But you know what Section 6001 and 6011 tell you? Let me read it. It says, every person liable for any tax imposed by this shall keep records and shall comply with such rules and regulations as the Secretary may from time to time prescribe. Shall comply with rules and regulations. It doesn't say statutes, rules, and regulations. Now let's go to Section 6011. When required by regulations prescribed by the Secretary, what does the government tell you you have to comply with? Does the government tell you you have to comply with statutes? No. Does the government tell you you have to comply with court decisions? Sometimes when you sue the government, the way the game of law is practiced in the United States, you will see lawyers like to cite one case after another to think that you have to conform and comply with all of these court decisions. Is there anything in here that says you've got to comply with court decisions? What's the only thing you're told by the government you have to comply with? Regulations. So if there is no regulation that says you have to pay the tax or turn over books and records, then you don't have to comply with anything. Now, it's very important to understand regulations. What's a regulation? Okay. Congress passes a statute, and then some government agency has to enforce the statute. Now, they enforce the statute based on regulations that they write. So by really telling you that you have to comply with regulations, they're really telling you you have to comply with the law. However, there are three kinds of regulations. This is very important. I got a letter from the Treasury Department, from Cheryl Cordick, Chief Assistant Section, Department of the Treasury. Letter is dated January 24th, 1996. Now, at this point, I discovered that there were three kinds of regulations. Only one kind had the force and effect of law, and the IRS had no regulations that had the force and effect of law. So I wanted them to tell me how you can tell whether a regulation had the force and effect of law so I could make it available to the public. But they wouldn't tell me. Proof that they didn't answer my letter, but they gave me enough information. If you read the first paragraph, dear Mr. Schiff, this is in response to your January 4th letter asking how you can tell what category a particular regulation falls. How can you tell? Now, they don't tell me. All they did is tell me what I already told them. I can read you the letter. It says, regulations are authorized by Internal Revenue Code Section 7805. They constitute the primary source for guidance on the Treasury's position regarding the interpretation of the code. Treasury regulations have generally been classified into three broad categories: legislative, interpretive, and procedural. When I wrote to them, I said, you know, Treasury regulations are either legislative, interpretive, procedural. How can I tell which one from the other? That's so that if an IRS agent ever handed me a regulation, I said, well, that's not a legislative, because look at the next paragraph. Legislative regulations are those for which the service is specifically authorized by the code to prescribe the operating rules. Listen to this. Generally, legislative regulations have the force and effect of law, unless the regulation exceeds the scope of the delegated power and is contrary to the statute. Interpretive regulations explain the service's position on various sections of the code. Although interpretive regulations do not have the force and effect of law, the courts customarily accord them substantial weight. Now ask yourself, if this regulation has no force and effect of law, how can the courts give them any weight at all? You see, the Constitution, which I have here someplace, says only Congress can make a law, can pass a law. How can a government agency write a regulation which the courts can enforce as law? You see, what the American public doesn't know today is that we are not governed by laws passed by Congress. Largely, we're governed by the regulations written by administrators in various government agencies, which technically don't have the force and effect of law, and we are governed by court decisions in which federal judges have misstated the law and enforce as law their own erroneous decisions. Now, procedural regulations are considered to be directive rather than mandatory, and thus do not have the force and effect of law. So, you are told, it's very important, you're told in Section 6001 and 6011 that you only have to comply with regulations. But now we know that there are three kinds of regulations. And if I were to show you if an IRS agent were to show you a regulation, you would think that that has the force and effect of law. Now, the Internal Revenue Code is not enforced, or the tax laws are not enforced on the basis of laws. They're enforced on the basis of regulations. Now, and the regulations are contained in what we call the Code of Federal Regulations. It's 26 CFR, and we're going to give you an excerpt from 26 CFR. Now, if I were to, the regulations that implement the code are about 16 separate, they're paperback volumes of varying thickness. You can see them in a law library. But if I were to pile the Code of Federal Regulations that implement this, it would probably be 1.5 feet. So presumably you have to go through all of that stuff and this before you know whether or not you owe an income tax. To show you how nonsensical this is, when you fill up your tank of gasoline, you're going to pay federal gasoline tax, don't you? You don't have to know anything. You don't swear under penalty of perjury. You just pay your tax. If you buy anything that's imported into this country, you're paying import duties. You pay a tax. When you pay your phone bill, you pay the you calculate it. Do you swear under penalty of perjury? Do you have to read statutes and regulations? Of course not. This is part of the nonsense involved in the collection of income tax. As a matter of fact, there is a principle known to every freshman law student, and it's called void for vagueness. You ever hear of that principle? No. Now, it rests on the other principle that persons are assumed to know the law. But that assumes the law is knowledgeable. If you can't understand a law, then the law is void. It's unenforceable. Now, nobody understands the Internal Revenue Code. How can you understand this? If it were mandatory, it would be void for vagueness, and any judge in this country knows that. Yet they put people in jail for violating a law that nobody understands. Even tax lawyers who go to school for an extra 2 or 3 years, they come out, they have tax services that explain the law to them. Well, how are you supposed to understand it? What the government is doing is using the enforcement provisions of the of the Internal Revenue Code and the regulations that only apply to liquor, tobacco, and firearms. They're using that to extort income tax from the American public. As I just mentioned a little while ago, the income tax is only the tip of the iceberg. What we want to do is take back America from the politicians and the lawyers who are basically running it. And the average American is a slave. Well, I want to mention this. People don't know. The average American doesn't realize he's a slave. But if we have studied, he's worse than a slave, because we have studied the books of the old slave plantations down south, and 90% of the income of the income of those plantations went to support the slave population. Slaves had to be fed, they had to be clothed, they had to be housed. If they got sick, they were afraid of plagues. An average slave cost $800 then, which is like $8,000 today. They had to be isolated and nurtured back to health. Otherwise, you're going to infect all of your slaves. It's not a pitch for slavery, but slavery is very uneconomic, because slaves don't work hard, because a hard-working slave is not going to get any money. So we know that slaves only gave up 10% of their productivity. Now, serfs, all during the Middle Ages, who weren't slaves, but they were tied to the soil, and they had to give the lord of the manor 25% of what they produced. So slaves only gave up 10%. Serfs only gave up 25%, and Americans who think they're free give up 50%. The average American is nothing but an income-generating machine for the bureaucratic political complex. And what they do is, unfortunately, there are a lot of people who want something for nothing from the government. And what the government has been doing is promising people who want something for nothing and going to regular wage earners and taxing their labor. So there's two kinds of people who pay taxes and people who get subsidies. And if you're paying taxes, you're just being used. You're supporting another family who the government has promised 4 votes to get something for nothing. Because all politicians do, of course, is take money from this guy and give it to him. And that's all illegal, incidentally. Incidentally, it's all illegal. I'm going to tell you why. Because the government cannot tax you. The Article 1, Section 8 of the Constitution says the Congress shall have the power to lay and collect taxes, duties, imposts, and excises, to pay the debts and provide for the common defense and general welfare of the United States. There are only three things the federal government can tax us for. To pay the debts of the United States. They can't tax me to pay his debt, yet when you guarantee your mortgage and you can't pay it, I'm paying off your mortgage. Or suppose you get a student loan and you renege on it. Technically, I'm going to pay because you went to... So the government is taxing me to support him. How about we're still paying farmers, they're getting tobacco subsidies for not growing a product which we're told we shouldn't even use anyway.
They're still getting subsidies for the REA.
Whatever. And how about when the government taxes us for the economic benefit of a foreign government? There's nothing in here that says the government can tax you. They're only for the general welfare of the United States. And it's the welfare of the United States, not the welfare of Tom, Dick, and Harry. In other words, when the government puts up a weather station or even puts up an embassy, it's for all Americans. Some Americans may use it more than others. But when the government taxes you and gives him a subsidy, he's taxing you for his benefit. Unconstitutional. And as a matter of fact, as long as I'm on it, if you want to see what the government actually does with your money, if you take a 1040 booklet, and in the back there's a pie chart. Everybody forgets to look at it. And if I were to say to you, how much money do you think the government spends? How much in taxes that it collects does it actually spend to run the government? That is all of the administrative agencies, all the foreign embassies, the FBI, the courts. What percentage of the federal budget do you think the government spends on running the government? You want to make a guess?
58%.
Make a guess. Yeah. 2%. The government only spends 2% of what it collects to actually run the government. Now, 20% is used for the defense budget, for the Army, Navy, National Defense, and Veterans Affairs. Now, I was in Army finance, and I can tell you that the money that the Army wastes, and we ever heard about the $800 toilet seats, but that's probably at least 25% inflated. But if we take the defense budget and what the government spends on running it, it's only 20. So the government only spends 22% of what it collects running the government and on defense. Well, what are the other things the government spends money on? Well, 15% is now interest on the national debt. That shows you how irresponsible they were. With all the money they wasted, they borrowed money to waste, and now we pay interest on the money that they wasted. So 22% is spent on legitimate government activity, 15% on interest on the national debt because they wasted so much. Can you imagine if the average family paid 15% of their income on interest on money that they borrowed? How could the government tell us how to run our businesses if they were so irresponsible? That's 15% now of what they have to collect. It's just interest on the debt. And incidentally, today, the debt of the United States is greater than the collective debt of every other country in the world. That's how big our debt is. And when the government reports the debt, it's $5 trillion. That's only the funded debt. That doesn't include unfunded Social Security obligations, unfunded veterans' pensions, unfunded retirement benefits, which are probably twice as great as the funded debt. So if you took the government's funded and unfunded obligations, it's probably 15 trillion, which is probably greater than all of the above-ground wealth of the entire stock market is worth about $7 billion, $7 trillion. And all of the above-ground wealth is reported at, I don't know, 8 or 9 or 10 trillion. The government has put us into hock greater than all of our above-ground wealth. And anyway, now...
They were so concerned about the children.
Yeah, well, anyway, all the rest are 60%. The balance, let me go over this again. 2% to run the government, 20% to run the Army and Navy, 15% to service our debt. All the rest are better than 60% are nothing more but transfer payments, where the government literally taking money from you and giving it to somebody else, whether you call it Medicare, whether you call it Social Security. See, they give nice names for social programs, Social Security, Medicare, you know, and physical human development. None of these things, of course, are authorized by the Constitution. Just to give you an idea, in Article 1, Section 9 of the Constitution, the government is authorized to borrow money on the credit of the United States. Incidentally, the Constitution was designed to limit the government's power. Thomas Jefferson, 200 years ago, said, let us bind up government in the chains of the Constitution. But who's binding them up? Now, here's what the Constitution says. The government is authorized to borrow money. Is there any provision here for the government to lend money or guarantee debt? No. So when the government borrows and guarantees debt, they're making you a guarantor. They're making you the guarantor. There is no provision in the Constitution for the government to guarantee debt, and they do it and get away with it because nobody is enforcing the Constitution on the government. Okay, now let me prove to you very quickly, and this proves it in one document, that what the government is doing is using the enforcement provisions of the code that only deal with liquor, tobacco, and firearms. Because if you go to a law library, you will see they're called Code of Federal Regulations. They're in paperback. And you'll see number 1, number 2, number 5, they go all the way up. It's called CFR, Code of Federal Regulations. Now, the regulations dealing with income tax are 26 CFR. Those regulations dealing with liquor, tobacco, and firearms are known as 27 CFR. Now, if you look up a statute, remember, you have to obey the regulation. So suppose you look up a statute and you want to see where the implementing regulation for that statute is. You go to the Code of Federal Regulations, you look up the statute, then they tell you where to go for the regulation. Because remember, you're told to comply with regulations. And now you know there are 3 kinds. Now, the 2 most oppressive sections of the Internal Revenue Code is the section that allows the government to seize property without a hearing, Section 6331 of the Code, which we'll get into later, and Section 7602 of the Code, which allegedly allows the IRS to summon you and bring down your books and records and audit you. Okay? When they send out a summons for you to bring your books and records, they say pursuant to Section 7602 and Section 6331. Now, we want to see where the regulations that authorize them to do it. Now, we see the regulations for seizures are in 27 Part 70. The regulations that implements the seizure section has to do with liquor, tobacco, and firearms. And the regulation that implements Section 7602, which allows them to audit you, again is in 27 Parts 170, 296. Now, this certainly surprised you. You see, everything is very simple if you understand that there's nothing wrong with the law. Since there is no law requiring you to pay income taxes, and there's no law making you liable, the government was very careful. They didn't pass any regulation. How could they write a regulation compelling you to provide books and records and allowing the government to seize property in payment of a tax that doesn't exist? What the government has done is relied upon the duplicity of its own judges to disregard the law and the self-interest of accountants and lawyers, many of whom don't even know this anyway, but even if they did know it, they have no financial interest in explaining it to you. So that's how the government is relied on. Now, I just pointed out very clearly that the implementing regulations for both audits and seizures are in CFR 27. However, if you brought up the question of regulations, an IRS agent could produce a regulation. Let me give you an example. A very important code section is Section 6303, which we're going to get to shortly when we get to assessments. Section 6303 says that the government has to send you a notice and demand for payment before you have to give them any money anyway. Now, nobody's ever got one. So you pay your taxes before you even get a notice and demand. Now, you can see Section 6303 right here says the implementing regulation for that, again, is 27 CFR. So 70, Part 70. So therefore, no IRS agent can actually send you a notice demanding payment, which again makes sense. If you understand the laws make sense. And since there is no law requiring you to pay the tax, how can an IRS agent demand? Well, let me just tell you, before I even forget again, this is very important. Let's put this all in context. The IRS is an agency that has absolutely no enforcement powers. They're strictly an administrative agency. Let me say that again. You can't deal with the IRS unless you know their actual function. They're strictly an administrative agency. And the only authority any IRS agent legally has is if you voluntarily want to pay the tax, he can record the transaction and say you paid it. But he has no authority to seize your property, disallow deductions. He has no authority to do any of that. Why do you think he doesn't have any authority to do any of that? Because there's no law that says you got to pay income taxes. And if the laws are okay, as I just said, how could he have... Is there a law allowing IRS agents to subpoena you in connection with the federal kissing tax? Can the IRS put a lien on your property in connection with the federal kissing tax? No. Why not? Because there's no federal kissing tax. Well, there's no income tax either. You see, you got to get this. You see, what I'm dealing with some people is cognitive dissonance. The magnitude of the swindle involved in the income tax is so great, is so overwhelming, that you almost can't believe it could have taken place.
But the media's done such a good job of
The
brainwashing all
exactly. Now, let me just show you something. Remember I told you when we went to the exhibit saying that there are three kinds of regulations. I wrote to the Treasury Department for them to tell me how you can tell the difference. I did about 2 follow-ups. They wouldn't tell me. Of course, I knew how to tell the difference, but I wanted a letter from them making it easy. Now let me show you how I can tell the difference. The next exhibit are the regulations that apply to Section 6303. Okay? Now, when we went into the Code of Federal Regulations 27, it said that the regulation for sending out a notice in demand is in 27 CFR, means Code of Part 70. Well, you'll notice on this exhibit you'll see 2 regulations. One from 27 CFR, which is the code having to do with liquor, tobacco, and firearms, and the other regulation is in 26 CFR, which has to do with income tax. Now, if you look at the regulation that's in 27 CFR, which you were directed to by the parallel table of authorities, here's how you can tell if a regulation has the force and effect of law. If they show you that the authority for the regulation is a statute. Now you look at the bottom of the regulation, and you'll see right here, here's the regulation, and on the bottom you see 26 U.S.C. 6303 and 6521. Those are statutes. U.S.C. stands for the United States Code. And that means Title 26 is the Internal Revenue Code. And the statute that this regulation implements are 2 laws, Section 6303, Section 7521. So the Treasury Department is saying, look, we are writing this regulation to implement these 2 statutes. Now, this is what for the use of people at the Bureau of Alcohol, Tobacco, and Firearms, which has enforcement powers. Since you are legally required to pay liquor, tobacco, and firearms, people who work for the BATF, they're allowed to carry guns. IRS agents are not authorized to carry guns, even though special agents do carry guns. By statute, they're not authorized to carry guns because they're only an administrative agency, have no enforcement powers. So here you can see a regulation which is a legislative regulation. Now, suppose an IRS agent said, well, we got a regulation too. Now, according to the parallel table of authority, they don't have a regulation, but they can pull out one, and it's shown right here in the right-hand side of this exhibit. Now, here's the regulation, right? What's the authority for the regulation? There isn't any. No authority. So what kind of a regulation is it? Is it a legislative regulation? No. It therefore must either be an interpretive or procedural. Does it have any force and effect of law? No. So you know what you can tell them to do with that regulation. But, all right, this is a family show. So I won't go on. Okay. So there you have it. Okay. Now, as I mentioned earlier, the Reader's Digest in the March 1997 issue pointed out that the IRS seized 3 million paychecks. The IRS seizes houses. They seize bank accounts. Now, obviously, as you already know, that all such seizures are illegal. Since there is no law making anybody liable for tax, no law requiring anybody to pay, how can the government legally seize property? Especially since the Due Process Clause of the Constitution says you can't take anybody's property except pursuant to due process of law, which means a hearing. Now, actually, when the IRS seizes property, they seize property in violation of both federal law and state law. In Title 28, which is called the Code of Civil Procedure, in Title 28, starting at Section 3001, you have what is called the Federal Debt Collection Procedures Act. And in that act, it simply says only U.S. Marshals can seize property, and they need court orders, and they need writs of attachment. And when the IRS seizes property, they seize property in violation of the garnishment laws of every state. Now, let me explain. The fact that you have private property, and laws were designed to protect property. If it wasn't for property, I don't know whether we'd have laws. Now, laws are designed to protect your property. That's the whole purpose of law. Going back to the cavemen, when the biggest, the strongest caveman can go and take your bone or your this. So laws had to be enacted to protect your property, so somebody just can't come and take it from you. However, some people should be legally entitled to your property. They might have injured you, breach a contract. So every state has what we call garnishment laws. It explains how some third party can get to your property. Now, in all of the states that have garnishment laws, they say before any third party, and it doesn't say with the exception of the United States government, before any third party can take your property, they A, have to take it to court, they have to have a court order, and then the court has to issue what is known as a writ of attachment or a writ of garnishment. A writ of garnishment is when they go to a third party who may owe you money, like a bank or an employer. A writ of attachment is when they want to take your car, they want to attach something that you already have, your house. Now, the IRS never has a court order, and they have no writs of garnishment, no writs of attachment. As I explained earlier, all IRS seizures are illegal. Now, all IRS seizures, of course, start off from Section 6331 of the Code, which is shown on page 99. And it starts off, if any person liable to pay any tax neglects or refuses to pay within 10 days after notice and demand. Now, you already know that since you can't be liable for the tax, Section 6331 can't even apply to income tax. And since I pointed out there is no regulation that allows them to send out a notice and demand, Section 6331 can't even apply. It can only apply to certain taxes for which you're liable. But let's assume it could apply. The first time I saw a notice of levy is when a bank in Hamden, Connecticut got a notice of levy, and they turned over $10,000 to the federal government. Up until that time, I didn't even realize that they could do this. I thought that before they would take my property, they had to have a court order. As a matter of fact, going back years ago when I stopped paying income taxes, people would say to me, well, do you have any money overseas or offshore? And I'd say no. Well, because I didn't think the government could seize your property. I figured I'd have to have a hearing, and at that hearing I'd point out I'm not liable, there's no law. But the first time my bank got a notice of levy and they sent my money to the government, I was floored. And I called some lawyers, friends of mine. I said, how can they seize property without a court order? And they said, well, the IRS can do it for taxes. I said, well, the due process clause of the Constitution says, well, you can't be deprived of property except for taxes. They said, well, but they can do it. They wouldn't give me any reason for it. Well, so when I got the notice of levy, which is a document that is shown on page 107 of the Federal Mafia, I read the first paragraph. I did something that most people don't do, since I had an Internal Revenue Code. And when I read it, I says, well, I knew it didn't apply to me right off the bat because it could only apply to people for which you're liable. But it said, levy may be made upon the accrued salary or wages of any officer or elected official of the United States, the District of Columbia, or any instrumentality of the United States by serving a notice of levy on the employer. Well, it was obvious that the employer here was the United States. And I said to myself, well, how can a statute having to do with levies, why does it single out a government employer and a particular asset belonging to that employee, rather? Why does it single out a government employee? And I couldn't understand why it was there, but I know nothing is an accident. Why does Section 6331, when it talks about levies, as I said, single out a government employee and only singles out a particular asset that they can take by a notice of levy. And then Section 6331B says the term levy means to seize. And after 20 minutes of struggling with this, as a matter of fact, there were a few people in my living room at the time, and we just couldn't figure it out. And then suddenly a light went on in my head. And the word levy means to seize. Now, the only property the government can seize is property already in its possession, because it already has it. So the government had to prepare a document where he can give to a person, telling that person, look, the money we owe you, we're going to apply against taxes that you owe us, because they can't seize it. Now, a seizure, a levy, is between two people, an IRS agent who takes your car. So there are only two people involved in what is known as a levy. That is a seizure. An IRS agent goes, takes your car, and he gives you a notice of seizure. But a notice of levy, which represents 90% of what the government uses to seize property, they have to go to third parties. They go to banks, insurance companies. They send the bank a notice of levy. Now, what they do is they send the bank a document which the law says only applies to the accrued wages and salary of a government employee. And why does the bank turn it over? Because when the bank gets a notice of levy, here's what it looks like. On the back of the notice of levy, the government presumably writes Section 6331. But they start with paragraph B. They leave off paragraph A. So the banker or the third party would not know that the notice of levy doesn't even apply to the bank. In addition, on the back of the notice of levy, they write surrender of property subject to levy. Now, a levy, as I said, is a seizure where an IRS agent goes and seizes property. When the bank turns over money, it's not turning over money subject to levy. It turns over money subject to a notice of levy. Now, before there can be a levy, the law says a notice of seizure has to be given to the person whose property is being seized. For instance, on page, let me get that. Okay, on page 114 of the Federal Mafia, you will see a notice of seizure. In Section 6502 of the Internal Revenue Code says the date on which a levy on property or rights to property is made shall be the date on which a notice of seizure is given. So there is no levy unless a notice of seizure is given. Now, when an IRS agent goes to the bank, he doesn't seize the property. He doesn't give them a notice of seizure. He gives them a notice of levy, and then the bank may write out a check. So this is not a levy. So on the back of the notice of levy, where it says what can happen to people who don't respond to a levy, it says any person who fails to or refuses to surrender any property subject to levy, the only persons in possession of property subject to levy are IRS agents. So the penalties that are on the back of a notice of levy really only apply to IRS agents who may seize a car and not give it to the government. So they are required to give the property that they seize to the government. So let me tell you what the government does. The government has prepared a document which it sends out to banks, insurance companies, and third parties. They leave off the document that portion of the law that might explain that this document doesn't apply to the situation, and then they put on the back of the notice provisions of the law that can't apply to third parties, only to IRS agents. In other words, a notice of levy is a totally fraudulent document for which any IRS agent who sends it out should be arrested for mail fraud. Now, what do you do about it? I'll show you how to stop and prevent notices of levy. Suppose your bank gets a notice of levy. Now, if you look at Section 6331, it says, if any person liable to pay any tax neglects or refuses to pay after 10 days, the secretary shall send out a notice. It doesn't say the IRS can send out a notice. It says the secretary. Now, notices of levy are not sent out by the secretary as Bob Rubin. Now, what you want to do, the minute your bank gets a notice of levy or a third party, you give your bank an affidavit. We have prepared this affidavit. It's in our lien and levy packet. And you tell the bank that the person who sent out the notice of levy was not authorized to send it out. You give them an affidavit saying, and then you, with another letter we prepare, where the bank, you ask the bank to write to the IRS agent who sent it and ask him for his delegation of authority from the secretary to him to send out the notice of levy, because you can point out to the bank, it says the secretary shall send out a notice of levy. It doesn't say the IRS. It doesn't say any particular agent. And you give the bank your sworn affidavit. Now the bank has a fiduciary obligation to treat your affidavit seriously. So the IRS uses a notice of levy to seize property from banks, insurance companies, brokerage firms. And you'll get a copy of the notice of levy. The first thing you do is you give the bank or the third party an affidavit. You say, be acknowledged that I, the undersigned, being of legal age, and you say revenue officer so-and-so, whoever signed the notice of levy, was never authorized by the Secretary of the Treasurer, pursuant to 26 U.S.C. 6331, to send out such a notice. Now, when you give them that affidavit, that's a sworn affidavit. Now, a sworn statement takes precedent over an unsworn statement. The notice of levy is not sworn to. Now, the bank is duty-bound. You also give the bank a letter pointing out that I'm writing in connection with the above notice of levy you received from revenue agent. Put his name in. I have enclosed with this letter my affidavit attesting to the fact that revenue officer so-and-so is without delegated authority to send out such a notice. Attached to my affidavit is Internal Revenue Code Section 6331, the code section pursuant to which the notice was sent. As you can see, it only says that it shall be the lawful for the Secretary to collect such tax. And you're pointing out that you didn't get the notice of levy from the Secretary. And then we prepare a letter in which you ask the bank or third party just to send a notice to the agent who sent this out to you, asking him from his delegation of authority to send out the notice. As a matter of fact, here, I have right here a delegation of authority. Here's a delegation of authority that special agents have. And you can see special agents are authorized to seize property used in violation of internal revenue laws. In other words, the only delegation of authority that an IRS agent has is to seize a still, to seize something used in violation of law. As I said, they can seize a still, but they can't seize money in payment of taxes. Before they can seize your money in payment of taxes, they got to take you to court. They got to get a judgment and then get either writ of attachment or writ of garnishment. The Fifth Amendment to the United States Constitution doesn't say the government can deprive you of property except for taxes. The government, under the Federal Debt Collection Procedures Act, must get a court order. Now, they've been getting away with it because the lawyers are so incompetent and because of the help they get from the federal judiciary. But here's what you do. The important thing is you give a sworn affidavit to the bank that that person is not authorized to have sent this out. Now, the bank or any third party has a fiduciary obligation to check and see whether the person is authorized. Remember, a notice of levy is not a court order. Now, normally, you only have to respond to court orders, and it will say, based upon the court orders you to turn this over, and if you don't turn it over, then you're in contempt of court. But a notice, trust me, a notice from an IRS agent, you can just wrinkle up and throw in the ash can. What you want, as I said, I know an employer who got a notice of levy from the IRS, and he called the IRS, and he said, look, I got this notice of levy. How come paragraph A was missing? And they hung up on him. And he made 2 such phone calls, and he just threw it away. Now, if the bank turns over the money, or if the third party turns over the money without a court order, and without sending that letter, without establishing whether or not the person is authorized, you sue the bank. Now, you can get triple damages for breach of contract. You sue the bank, I don't care if it's, you sue them in a state court. And the issue that you raise on your lawsuit is that they turned over the money to somebody who was not authorized to receive it. And then the bank will have to bring in the IRS agent, and he'll have to produce a delegation of authority, which would have allowed him to send it out, and he can't produce it. Now, before, I used to have a letter that we sent to the bank explaining that a notice of levy is not a levy, that you don't have to honor it. As a matter of fact, there are documents right in the IRS's revenue manual As a matter of fact, right in the book we explain here, on page 112 of the Federal Mafia, right out from the IRS's legal reference guide, it says, where a notice of levy is served upon a third party and there is no response within 10 days, it is to be followed by a final demand. And then it ends up, in the event that a final demand is not responded to, a suit will ordinarily be required to reach the property. A suit will be required. In other words, if the third party doesn't turn over the money, sue them. We're going to have to sue them. Now, they won't. Basically, what this says is if we can't intimidate the third party into turning over the money without a court order, then we just won't get the property. Now, why do people turn over money to the IRS without a court order? Because the typical businessman is afraid to be audited, and he thinks if he doesn't do what the IRS tells him, he'll be audited, which basically is extortion under color of law. Now, one of the things I would say, if you get any kind of a letter from the IRS saying you owe the money, one of the things you can do is go up there with this notice, or they tell you if you don't pay the amount of money, we're going to seize your property. So I would go up there and I'll say, well, remember we discussed on the section 6001 and 6011, you're told to comply with regulations. Now you go up there and you say, okay, I got this letter from you telling me that if I didn't turn over my money, you're going to seize my property. Is that correct? Okay, I got my checkbook here. All I want you to do is show me the regulation that says I got to pay this, and I'll be happy to write you out a check right now. Not unless you can show me a regulation that says I got to pay attention to what you tell me. Show me the regulation, and they won't have a regulation that has the force and effect of law. Now, if the IRS threatens to seize your property, or you can trap the IRS agent in several ways. You can say, now, let's say the IRS sends you a notice that if you don't pay this amount, he's going to seize your property. They send you a final notice prior to seizure. You say to the IRS agent, okay, I want to pay this. What is my liability? And let's say he says you owe him $30,000 or whatever it is. Is that what I'm liable for? Yes. But suppose I can't pay it. What can you do to me? Well, the IRS saying, well, we can seize your car, we can seize your house. In other words, if I don't pay you a portion on this, you can seize my car? Yeah. Well, in that case, I'm certainly going to pay you. Now, you can actually take your checkbook and you start writing out your checkbook. Who should I make the check payable? The Treasury Department, Internal Revenue. You fill it out. And you say, well, there's one thing. I want to make the check payable for $10,000 or $15,000. I want to put the code section in here that makes me liable for the tax. Now, would you help me out? And you can open up your code right here where it says liability for tax. Here it is. You would have it already tabbed. And you say, you know, I'm having a problem here finding it. You open up the code section. You can see very clearly it says liability for tax. Then you say, you tell me the code section. You just said I was liable for this tax. And if I didn't pay it, you're going to seize my property. Well, I'm going to pay you. Just tell me the code section that makes me liable. There, he won't find it. So then you can say, then what do you mean you don't? If you just told me I was liable, I got it on tape. You told me I was liable, and if I didn't pay you a tax for which you were going to seize my car? Bring your manager in here. Maybe he knows the code section. Call Washington. Maybe they know the code section. Now, he just told me, and I got on tape, that he was going to seize my property unless I paid a tax for which I was liable. Now he can't even produce the law that made me liable. You know what he just did? He broke the law, and I got it on tape. Because the minute he does that, now I turn to the last tab here, which is 7214. And as a matter of fact, I'd go up there and I'd photocopy this statute and I'd leave it with him. Let me read you what section 7214 says. It says offenses by officers and employees, unlawful acts of revenue officers or agents. It says any officer or employee of the United States in connection with any revenue laws who is guilty of any extortion or willful oppression under color of law or who knowingly demands other or greater sums than authorized by law shall be fined not more than $10,000 or imprisoned not more than 5 years. So what do I have? I have on tape an IRS agent telling me that he's going to seize my car if I don't pay this liability, right? Then I ask him to produce the liability. He can't. What did he just do? He just violated this criminal statute. And I could go right down to the U.S. Attorney's Office and swear out a criminal complaint. Instead, what I would do is I would make a tape of that interview and send it to the district director. and say, I just went down and this is what your agent threatened me. He's breaking the law. I was willing to pay if he could show me where I was liable. He couldn't show me where I was liable. He violated Section 7214, and if you bother me anymore, I am going to charge you and him for violating Section 7214. So it's not that we are without weapons, except that the American public doesn't know about Section 7214, and they assume that they're liable, and they assume that IRS agents have the authority to do all this. The other thing I will tell you is this. If an IRS agent attempts to take your car, seize anything, you resist. You absolutely resist. If he goes to take your car, you can tell him, you put your hand on that car, if he doesn't have a court order. In rare cases, now this only has to do with income tax. This doesn't have to do with Bureau of Alcohol, Tobacco, and Firearms. Let me read from the IRS's own manuals, which they violate all the time. Listen what it says. This is from the IRS's own legal reference guide. It's paragraph 332. It says, during the course of administratively collecting a tax, an occasion may arise where service of a levy or notice of levy is not adequate to seize property. Listen to this. Listen to this. However, it cannot be emphasized too strongly that constitutional guarantees and individual rights must not be violated. Property should not be forcibly removed from the person of a taxpayer. So if they try to take your car and you shove them away, they cannot use force to take your car. Such conduct may leave a revenue officer open to an action in trespass, assault and battery, and conversion. Okay? It says, if there is reason to suspect a failure to honor a levy or an interference, the matter should be returned for legal action against the offending party. Let me tell you how the IRS wants to seize your car. The IRS wants to go up, ring your doorbell, say, look, we're taking your car. Now, what they actually do many times is they stop and they stop at the sheriff's office or the police station, and they say, look, I have a guy here, I have this notice of seizure I got to serve, and we think there's a problem here. Now, the policeman or the sheriff, he wants to stay on a good side of the IRS too, and he thinks what he has is something like a court order. He doesn't. Now, if it was a legal document, he would have an FBI agent, a U.S. Marshal, but he knows he doesn't. So he cons the local police and the local sheriff into accompanying him. Now they'll ring your doorbell. Now the person comes to the door and the IRS agent says, I have a notice of seizure for your car. And the person sees a policeman there and he's afraid to do anything. So he doesn't do anything. And he doesn't resist. The person says, give me the keys. And many times they'll actually give him the keys, or they'll call a tow truck and they'll take the car away. And the IRS agent can then claim, well, this was an administrative levy. I mean, we didn't use any force. We just told the guy we're going to take his car, and we took his car. In a situation like that, if he shows up with the police, you ask the police, what are you doing here? Did I violate any local statute? What are you doing here? Do you usually go enforce federal law? And in other words, it said, does your supervisor know you're here? What law have I violated? What are you here for? Well, I'm here with him. Well, what is he here for? Do you have a court order? As a matter of fact, you say, then come back with a court order. You're not taking that car, and you physically resist. The IRS agent takes the car, and if he resists back, he is committing, you can get him for assault and battery and trespass. In other words, the final analysis is this. The government needs a court order to take property, but they never use a court order. What they do is they rely on the duplicity and the malfeasance of lawyers to turn over money without court orders, and they rely on the ignorance of the public who think that IRS agents are operating legally. But in any given community, if anybody called the sheriff, and if the sheriff made one call to the IRS in that community saying, look, if anybody from your office comes down here and attempts to seize any property and they can't produce a delegation of authority from the secretary, I'm going to arrest that person for illegal conversion and extortion, and that would stop all IRS seizures in any given county. Before I go, there's one other thing I'd like to mention. You know, the IRS has filed over 1 million tax liens. Actually, they call them notices of liens because they're not actually liens. They're filed as notices of lien, and the IRS hopes that your county recorder files them as a lien, but they're not really a lien. But in any case, these notices of liens violate both federal and state law. So all these liens the IRS have filed, again I want to repeat, violate both federal and state law. And how you can prove this? Well, in Title 28, you will find the Federal Debt Collection Procedures Act. It's in Section 301. And you will see that before a lien can be filed against any American, only U.S. Marshals can file liens, and they need writ of attachments. And then if you check the garnishment laws of your own state, you will find that there are 35 states that have adopted the Federal Uniform Lien and Registration Act. In 35 states, in their statutes, say that all federal liens have to be certified by the Secretary of the Treasurer or his delegate. 35 states say that. Those states that haven't adopted the Federal Debt Collection Procedures Act use the same wording anyway. So it says that tax liens have to be certified by the Secretary of the Treasurer or his delegate. Now, none of the IRS liens are certified. That's number one. They say notice is hereby given, and they're always signed by a revenue agent who has no delegation of authority from the Secretary to file liens against anybody. So what you do is you take what they filed against you, which will not be certified, and not by anybody delegated by the Secretary of the Treasury, and you show that to the county recorder, and you show her that she's filed a lien against you, which, according to state law, should not have been filed. If she doesn't remove the lien, I would also go then to the county attorney and point out that the county has filed a lien against you that, pursuant to state law, should not have been filed. Because they've done this, they've interfered with your credit. Maybe you can't get a credit card. And if they don't remove that lien, you could sue them under the tort laws of your state. Tort means an injury. And by recording a lien against you that should not have been filed, they've injured you, and you can sue them under the tort laws. And as a matter of fact, you can even sue the revenue officer who filed the lien because he clouded your title. It's called slander of title. Again, let me repeat, all IRS liens are filed in violation of both federal and state law.
Here on the dollar bill, just to show you how clever these guys are and how crafty they are, they, on the $1 bill at the top, you'll see this little image right here. I think I can make that. This is just a large, an enlargement. This is an enlargement from a photocopy machine, so it's not really that clear. But if you blow it up from an actual photograph, you'll see it is it's a little owl. It's a symbol of the Bohemian Society. The Bohemian Society meets in California on the last 2 weeks of July of every year. The Bohemian Society is another secret society that was spun off of a larger secret society. The Colombians have a little fun club that they meet for 2 weeks out of the year in Northern California, and they're called the Bohemian Society. They meet in something called the Bohemian Grove. I have pictures, which I don't have with me tonight, but I'm going to have on my next lecture, showing all of the presidents, all of the living presidents, excluding the new one, but all of the living presidents at the